Ladies and gentlemen, boys and girls, children 18 plus, you are tuned into the Loan Officer Podcast with me, Dustin Owen, and finally, in the office studio, by lots of demand, and by demand, it's my demand, it's the one, the only, Cynde Velez with United Realty Partners. No, I screwed it up, didn't I, Cynde?
Just a little bit. United Real Estate Preferred.
So I always say it's you with United. You know, Cynde with United. Okay, Cynde today, if you looked her up, is a realtor, top producing realtor with United
Real Estate Preferred.
Real Estate Preferred. But here's how I met her. I met her when she was the who's who at Wells Fargo, top regional manager, previously a branch manager. Before that, a rookie loan officer who became a top producing loan officer. You've coached for Xinnix. In fact, you're like besties with the owner of Xinnix. And now you teach loan officer courses for one of the top independent mortgage bankers in the United States, FBC Mortgage. And oh, by the way, you've heard Cynde's name before if you've listened to several of our episodes. She's one of my favorite bosses ever, because I once had the luxury of learning and working under Cynde. So I've thought, what better person to speak to our audience, because she's a badass business boss. She's a mom. She's a wife. She's a realtor. She's a mortgage coach. She's a ex-top producing LO who started as a rookie, because we all start somewhere, a top producing branch manager, top producing regional manager. Holy cow, you're a walking, talking wealth of information that we get to sponge off of today.
Thank you for having me, and that's quite a build-up for an introduction. Hopefully I can live up to your listeners' demands.
You'll do just fine, and I will try to back down my excitement, and I'll take it step by step and question by question. But we're talking off camera, like, what's today going to be like? And I'm like, Cynde, I just want to pick your brain.
That's cool. Let's do it.
So we're going to pick away. Folks, we may jump around, but I promise you, you're not going to want to tune out, because there's going to be nuggets dropped throughout the process. I want to start with something we were talking about, what you're doing right now. Right now, you are selling real estate full-time.
Yes, I'm full-time. I do have a partner in real estate because really the industry is moving towards that. You just really can service your clients better. Your span of control is only so much, no matter what you do. You need to build a team around yourself, whether it's real estate or whether it's mortgage. And
you're also coaching loan officers.
Yes, I am. Well, I'm coaching in a ground-up type of fashion.
So teaching more.
Teaching.
Okay.
Teaching the industry from basically, the nuts and bolts, start to finish, the ground floor up. We start at the very beginning and talk about what's the history of mortgage banking and how did we end up here, and from there build with, loan to values, ratios, debt ratios, what's the secondary market, how are loans sold, how do the financial markets work, and build all the way through that to where we have, income, assets, self-employed, structuring of the loans, talking about different types of products. And then once we've gotten all of the foundational pieces together, then we really start to work on, live transactions and deal making and talking about different scenarios and that type of thing.
Because so you're doing this on behalf of FBC Mortgage.
That's correct.
And they're going out and they are hiring loan officers who I'm assuming don't have any experience or much experience, and then they're relying on you to help get them up to speed.
Typically, we don't. That's correct. Typically, the loan officers that are in my class, in my academy, if you will, don't have any experience in the industry.
Okay.
Maybe they've decided that the career path they want to take is to enter the mortgage industry and be a mortgage loan originator. So they may already have their license, their national license. Some people do take that initiative on their own. And then some of my students are actively seeking their license while they're in class.
Now, are all your students LOs, or are some going to be loan officer assistants or processors?
I don't typically have processors in the class. I've been in operations. It's part of my background. I wouldn't say it's necessarily my forte. I'm really more of a salesperson, as you know, because you've known me for so many years. But I do have some team MLOs in terms of structure, and sometimes we do have loan coordinators.
Okay.
But really, those folks are assisting those rainmaker top producer loan officers. So they need to be able to function within that environment and that kind of that fast-paced world that we're living in with mortgage right now.
I wish I knew this because I had I had a listener call in last week, and she's up in Ohio. And she's like, I want to go work for a company that has the type of training that I talk about on the show. And I didn't really know in the area of Ohio that she is in. Actually, she's from Ohio. Now she's in Michigan. So she's in the Detroit area of Michigan. And I didn't know really where to point her. Not that I would know if FBC had a branch in Michigan or not, or in the Detroit area or not, but I at least would have known the name of a company that I respect to say, hey, you may want to reach out to somebody there. I actually told her to reach out to some of her favorite realtors, ask her favorite realtors who their preferred lenders are, and then reach out to those lenders to see what type of training they offer to younger, newer professionals in the industry who maybe went out, got their NMLS, but they really still don't know what they're doing.
Right.
I want to go back. What prompted you to enter the mortgage industry when you did? Because you came in with no experience. And did you jump right into sales, or did you have a role before sales?
No, I mean, this is a like real throwback, right? So
Like Biggie and Tupac were still alive?
like they were probably not even born yet. I don't
No.
know. I entered the mortgage industry actually in 1984 when I graduated high school.
Wow.
And I did so because my parents divorced when I was in high school. College wasn't really an option for me at that time, just because my mom was working 2 jobs to make things happen, and she had gotten a real estate license, and she also worked as a secretary at the high school that I went to. And
I bet that was fun. Not
right. And no, it kind of actually was fun. There were some perks to it.
Okay.
And ask me later, and I'll tell you a good story before we wind up on why that's a good one. Okay, which you'll definitely appreciate. But so she was working in the real estate industry. And back in the day when you had to go to the office, a different real estate office, and pick up a key from the real estate office to show another house, because there was no such thing as lock boxes. There was no such thing, obviously, as MLS and the internet. And she had to pick up a book from the real estate board every single week that had all the new listings printed in it, like almost like a phone book. It was kind of crazy.
I've heard these horror stories before.
Yes.
Mind blowing.
Right. So she had a friend, and my mom had me when she was 20 years old, and so she had a friend who was 10 years younger than herself, and then just 10 years older than I, so she kind of related to both of us. And she had been in real estate and had gotten into mortgage and had started to do very, very well. And I grew up in Boca Raton. And so this
Why do I
friend,
think you were from Muncie, Indiana?
I was born there.
Okay.
I lived there till I was 10.
Okay.
Yeah. And so Diana kind of got me, an interview with a savings and loan, which those all went bye-bye. The list of companies that I've worked for that are no longer, having been in the mortgage industry for such a long time. And so she connected me with her boss. He said, I don't have anything available for somebody who has no experience. And so I pretty much called him every day the entire summer after I graduated while I was still working in retail. And finally, he's like, oh, my God. All right, I'll find something for you to do just so you'll stop calling me.
So stop right there, only because if some of my non-mortgage professional listeners and viewers are tuned in, which we have quite a bit, and usually they are college-aged or recently graduated. I was just having this conversation 2 days ago at a lunch appointment with 2 guys that I mentor out at UCF. And they were talking about their friends and their friends' inability to pick up the phone and go after what they want. And if I heard right, you just said you were told no and you didn't take no for an answer, and you called and you called and you called, and you showed that you were persistent, that you weren't going to give up because this is something you had your mind set to. For anyone out there who's aged 19 to 29 and you're not getting what you want from a career standpoint, ask yourself, are you doing what it really takes? Okay, so keep going. That's just...
You're 1,000% right.
It's so relevant in today's world, and I find that so few people, especially younger generation who like texting, are willing to just kind of have that bravado to go after it. And where your story, I believe, is going is you ended up getting hired.
I ended up getting hired. And I think I called him every single day because I just really needed a job, and I saw that this friend of my mom's was doing very well, and I had a desire to make a good living, and I wanted to be able to be independent. And I was obviously young, but 18, so times were a little different then than they are now also. He hired me, and as like kind of a junior loan officer, I was typing, verifications of deposit, verifications of employment. Yes, typewriters back then. There was no fax machines then. Everything had to go snail mail. So I learned a lot. And then I was in a processing kind of position for about 2 to 3 years.
Okay.
And I'd find that by March, I wouldn't have any sick time left. And I just was really bored. Because I'm really more of a salesperson. The behind the desk kind of thing, I mean, if it's a model match for you, fantastic, because we need everybody in the industry, right? We need a fit, we need the right people in the bus and the right seats no matter what we're doing, because we have to build our team. But I just knew it wasn't for me. So then I moved into origination. Took a hiatus from it for a period of time, and then got back into the business. I left the business when I was about 24 and got back in when I was 30. That's when I went to home bank and as a rookie loan officer, and then kind of that's where our story starts to unfold a little.
Correct,
there.
yeah, because you were a top producer at a mortgage company who's no longer around, unfortunately, because they were a great company, just bad timing. Mm-hmm. But Home Bank Mortgage Corporation, which is how I think I got my start in the business. It's how your husband Jeff got his start in the business. Right. Mm-hmm. My business partner David Holbrook, one of our top producing branch manager Ben Davis, like we all were there, right. And that's how you and Casey from Xinnix became really good friends, right?
That's correct. That's how we met.
She was a top producer at that time at Home Bank as well.
Yes, she was.
So you guys were both top producers. She was in Atlanta, you were in Florida. Kind of friendly competition a little bit. Who's going to outproduce who?
Well, I don't know that I would have ever outproduced her because she's a superstar. But the first time I met her, I just was so wowed by her, just had so much respect for her and her energy and her intelligence. And I've never in my life met anyone who has more drive and focus. And that just blew me away. And I just when you meet somebody like that and they impact you, you just, you emulate and you want to be like them. It's a role model.
So you produced, got your start at 18, but you said, by 24, 26, took a hiatus, got back into it at 30. How long did you originate before you became a branch manager? And were you a producing branch manager, or did you stop producing to manage?
I was producing branch manager.
Okay.
One of the hardest jobs in the mortgage industry.
Yes, it is.
So for anybody who's listening who works with a producing branch manager and they find time to balance and be a good leader, make sure you thank them because it's a hard job. I was with Home Bank in 96. I originated as a originator for 4 years. Before then, I moved to Wells Fargo as a producing branch manager and actually opened my own branch ground floor in the Lake Mary, Florida area.
Okay. Yep. And then from there, kind of rose the ranks from producing branch manager to regional manager.
Correct.
And that's kind of actually where our paths started to cross. I think you're at that regional level at that standpoint. And then the Home Bank connection, for anyone listening who has no idea who Home Bank is, and you probably won't because they went out of business in like 2007, I believe. But those of us that are still around, like we have a bond. We have a connection. Yeah. We still, if you cut into us, there's a little bit of a Home Bank blue in our blood. So that it's just a commonality. I can go to North Carolina, I can go to Jacksonville, I can go to Tennessee, and if someone else was at Home Bank, instantaneously we have that bond. But tell me about your time with Xinnix. Are you still with Xinnix?
No, I'm not with Xinnix.
Okay, but you worked a little bit doing some coaching with them, right? You were a coach?
Yeah, well, so some coaching in terms of the people who would, maybe experienced people who are working on, the Edge series and that type of thing, teaching in that respect. Actually, we did a lot of traveling. Casey and I had the opportunity to travel quite a bit together as we took our training out to different mortgage organizations throughout the country. I was with them about 3 years. Traveling is hard, especially when you're a mom and you're away from your kids.
A dedicated mom involved in your daughter's cheer,
tough.
Yeah.
Yeah. So it just the traveling became a little bit too much, but it was such incredibly valuable experience. And Casey and I I think our best training we did was just basically a workshop type training. So training is always the best if you get people involved. And so we had a recruiting workshop for managers who were looking to recruit loan officers with lots of tips. And then we had a purchase workshop because at the time we were starting to come out of the refinance boom after all the HARP loans and move into a purchase market, which ultimately is going to happen in the very near future again. So people had forgotten how to go out and obtain purchase business, which is really what is sustainable in our industry. So we would do this great workshop and, get people together for 2 days, and it was good. It's high energy, and so we did a lot of that together. And then I would teach them, obviously, some online classes through WebEx and everything a couple of times a day.
I got to be a part of one of those courses.
Yeah, that's right.
I still today run a sales meeting based on how Casey taught it. And that was probably 9 years ago or 7 years ago. And the one thing that I took from her was start every sales meeting with music.
Yeah.
Have music playing. It sets the tone. It sets the mood. All right. So now that we have laid your background, right, people have a good sense of who is Cynde, right? Don't just take my word for it. You just took her word for it. I want to pepper you with questions. Okay. Because we have a lot of loan originators, especially younger in their career loan originators who are tuning in. We have realtors who tune in. We have branch managers and regional managers, and we have some CEOs that tune in and listen. I got a text from a VP at a national mortgage insurance. Hey, love the podcast. I had no idea this person actually tuned in, but they're tuning in. So you mentioned purchase market, going after purchase business. So ex top producing loan officer, top everything in the mortgage industry, but now a realtor. Talk to our loan officer listeners. They need to focus on the purchase business. What are the 3 things that they need to be doing in order to properly focus on the purchase business?
Pick up the phone.
Pick up the phone, like when it rings, pick it up.
Pick up the phone and make an outbound call and talk to somebody about their business.
Ooh, okay. I thought you meant when the phone rings, make sure you make a priority to pick it up. And you're saying pick up the phone and call somebody.
Yeah. My partner and I sold about $18 million in real estate in 2019 and about 12. We were a little off last year just with COVID and things that were happening. And obviously I got very busy with mortgage too, which is, as Dustin will probably validate, that's good production.
That puts you in the top 2%, maybe even 1% in most markets.
Yeah, we are in the top 500 in Orlando.
Yeah.
And
that's 500, ladies and gentlemen, out of 12,000. There's 12,000 realtors in the greater Central Florida area, and Cynde and her partner are in the top 500. Yeah, it's pretty awesome.
Yeah. So can I give a shout out to my partner really quick?
Yeah, please do.
I don't want her to not yet.
Yes.
Michelle Kreischer, not all of this could happen without her. She's a great team, just like you and JCR.
All right, perfect. Thank you.
So in terms of, purchase market, what are you doing? I see that loan officers need to realize or become more aware that the purchase market is the sustainable business. It's what's going to drive the economy. Rates are going to go up, and the low-hanging fruit on the refis is going away. And if you're looking at your pipeline and you're doing more than 50% refinance business right now, you need to start a shift immediately. And
you should be freaked the F out.
Yeah.
That would be my terminology, not Cynde's, but you're right. 50.
Right.
You said if more than 50% of your business is refi, yeah, you should be freaking out a little bit.
Honestly, it really shouldn't be more than 25, and that 25% should come from closed customers. But if you're new to the industry, you've got to start somewhere, and you can get your feet wet with refis too. It's a good way to learn. It's a good learning tool, right? You're not going to, excuse me if you need to edit this out, but you're not going to screw up somebody's purchase closing when they've got their, furniture on a moving truck and things don't happen the way they should because they already own the house and it's refinanced. So if there's a mistake, it's a little bit easier tolerated.
All day long, I tell people you can't screw up a refi.
Right.
Very rarely. Now,
unless you set poor expectations.
Or divorce situations, or someone has to pull money out for a very specific reason. Daughter needs surgery. Yeah, you can maybe screw that one up.
Yes.
But most refinances you can't screw up.
Right.
It's a great way to get started.
It sure is. So those entering the industry had the benefit of at least, 2.5 rates right now. But eventually everybody in America is going to have a mortgage that's at 2.5%, and there's not going to be a reason to refinance anymore. Or at least the large majority that we can refinance will. So with purchase business, and I see a lot of loan officers looking at, they want to get the whale, right? They want to land the big account right out of the gates. That's just probably not realistic. It's a great goal.
You mean by whale, you're talking about as a loan originator, I'm trying to target the biggest, baddest real estate agent in my market who sells the most homes.
Right.
And you're saying...
Who already has relationships.
Yeah, multiple.
Right.
Yeah.
They've been in the industry a long time if they're doing that much business, and so you're going after somebody who's top producer and you're brand new. It might not be the best fit. However, that top producer most likely is scaling a team, right? If they're scaling a team, they have new people. How are they going to attract talent? They're going to attract talent to their team because people in the real estate industry join experienced realtors the same as somebody joins Waterstone and comes to work with you because they want to learn from them and new to the industry. the best way. So find the team rather than just going after, the top of the house and going at, after the person who's the top producer. Find the team, find out who's newly licensed, and, partner with those folks. Reach out to the transaction coordinator on the team, right? The transaction coordinator on the team or the team lead, that's the person who's setting up all the vendors and all of the relationships. Because that person who is working and that top producing level, they don't have time to be caught in the daily minutia of it. They just want to know that they have good, reliable referral sources to work with. So I think that's a start there.
I like that. Pick up the phone.
Pick up the phone.
Yeah.
Pick up the phone. If you can't see somebody in person, which I really think you probably can, but go pick up the phone, because I see a lot of realtors out. Realtors are doing open houses. Realtors are doing broker opens. We're out there working. We've been deemed essential, the same as mortgage, and have been working since the middle of March 2020, like everybody else. Don't text me. Don't text me.
Ooh-wee.
Don't text me, and especially don't text me.
You just had some butthole puckers right there. Holy cow. It made some people feel uncomfortable.
Yeah, probably.
Okay.
And especially don't text me with a text that's so long it breaks itself up into 2 or 3 parts, because I'm just going to delete, right? But if you do call me, make sure you're calling me with something of value, right? And I think that's the hardest part. It's the what do you say? How do you deliver the value to get somebody to want to talk to you, to want to return your call? So that's just the fear. That's the call reluctance. We all have it. I mean, it's just innate. But you just have to remember, the more you pick up the phone, the more no's you get, you're closer to that one yes, right?
Yeah, and the better you get, too. I mean,
Right.
the more
It's
times
practice.
you fumble all over yourself, you'll fumble less the next time. And then if you start buying into James Clear's Atomic Habits, 1% better every day, eventually, after doing something for 30 days, you'll be, exponentially better than you were on day one. So how about this? So you're training younger. I say younger. Younger to me is younger in their career. Sometimes younger is also younger because they're younger in life.
Yes.
But you're training mortgage professionals, the future leaders in this industry. What excites you about what you're seeing in your classroom? What also concerns you about what you're seeing in your classroom?
So what excites me is when someone's, because we're obviously in a virtual environment, what excites me is when someone is asking good, thoughtful questions, asking the question beyond the question, right? So what's the scenario if this, right? Lets me know that they're paying attention and they're really taking it seriously, because it's easy to become distracted. It's easy to sit at home in a virtual environment and have your screen open to, what we're working through Microsoft Teams on, and then, be shopping at, Target or, J.Crew at the same time. You can multitask. You can do these things. It's very obvious to me who's paying attention just based on the questions that they're asking. It also lets me know what their enthusiasm is for what they're doing, why they've decided to do it. That's a big driver for me when I'm speaking to somebody and like, what drives you to get into the industry? I'll be very honest, and if somebody tells me the first thing is because I can make so much money, I get so nervous.
Yeah.
As you mentioned, I'm from Muncie, Indiana. My parents taught me one thing very, very well, and that is you work hard and the money follows. You focus on the dollars, you're never going to take care of people the right way. And you know that. You and I have had that conversation many, many times, right? It's hard.
Yeah.
So when I'm working with a loan officer, and they can tell me exactly what their paycheck is going to be based on their pipeline, I know they're not paying attention to customer service.
No, and I have witnessed that. I've experienced it firsthand, but I've witnessed it. You're right. The loan officers who have the best customer service reviews and typically close the most business, they can tell me how many units they're closing. They can tell me how many families they're helping.
Exactly.
Some of them, and I actually give them a hard time about this, they don't even check their commissions. I go, you still have to check your commissions. Like please double check what our accounting system is putting out there to make sure you're getting paid appropriately.
Right.
But to them, the number, the check came in, it was more than I need. Made me super happy to see that hit my account, and I'm gonna go help another 7 or 12 families this month or next month.
Right, exactly. And then pick up the phone and thank all those people who closed a loan with you and ask them for a referral too.
Yeah.
So, it's again, it's communicating.
So
it's sales.
yeah, so you're looking when you're teaching, you're looking for that person who has the childlike curiosity, who's asking why. Well, why this? Well, but what does that really mean?
Right.
What concerns you? Like when you're an instructor and you're teaching, what are some things that pop up, whether they're questions or whether they're behaviors or mannerisms that based on your experience, I mean, you've recruited hundreds of loan originators into the business. Some end up being top producers. Some end up being duds. You have a good litmus of what works and what doesn't work. When you're in this teaching environment, what's concerning you?
Well, what concerns me today is probably the exact same thing that concerned me in 2005. And that's people who are getting into the industry kind of for the wrong reasons. If you're not in this business ultimately because you have a servant heart and you want to help people, then you're doing it for the wrong reasons, because it's a very stressful business and you are toying with one of the most important financial decisions and purchases in their life, not to mention one that is tied to an extreme amount of emotion, right? And to focus on I want to get in this industry. When somebody says to me now, as they did back in 2005, I want to get in the mortgage business because it's the hot business right now, because it's the go-to business, because it's where I'm going to make the money. Everybody's getting in mortgage, so I want to get in mortgage. And that's when I just go, oh, no, it's, so, I see those same trends. And then you see a lack of engagement and people asking, questions as it relates to really more themselves, sort of, in a classroom environment, it's more of a self-centered type of question, right? About how is this going to help me, as opposed to how am I going to help somebody else? Like, am I learning what I need to learn so I can help someone achieve the dream of homeownership?
Yeah, you're talking earlier off camera about the hours worked. In your experience, someone entering into the mortgage industry, or just someone in general who works real estate or mortgage, what type of hours should that person anticipate needing to work?
All the time, almost. You have to have some work-life balance, but it is the type of industry, whether it is real estate or mortgage, that can consume you and will consume you when you first enter into it. And you have to be prepared, at least for the first 2 years, to probably be dedicated to 60 to 65 hours a week.
Yeah. I mean, that's, I like you saying it. I can sit on this microphone and say it all day long, but to have you come in sometimes and someone like you, it's like, oh, okay. Like, I'm hearing this multiple times over. I tell anyone that I hire, like, look, this job sucks. It's super rewarding and very fulfilling, and you can make a ton of money. But it's retail. In retail, the customer is always right. In retail, you are bending over backwards to make people happy because that's your job, and most times you don't even get a thank you. That's why you get a paycheck. And it's a job that you should be prepared to make yourself available nights and weekends.
Correct.
The earlier you are in your career, the more available you have to make yourself. I'm not preaching you have to work nights and weekends. I'm saying to make yourself available. There's some Saturdays you will work 4 hours. There are some Sundays it's just a matter of answering a text or a voicemail,
right,
where all they wanted you to know, and they would be a realtor such as yourself and one of your buyers, had a question whether or not something was a townhome or a condo, or whether or not the seller could contribute X amount of dollars towards closing costs. Whatever the case may be, those are the types of questions. But yeah, early on in your career, and there's going to be nights that, well, you came in at 7:30 or 8 and it's 8 o'clock and you're still here. The good news is that there's a paycheck attached to those hours. And my buddies who are engineers who put in those hours, their paycheck is usually the same.
Right.
Our paycheck is more typically with those hours that we're working. Are you finding that there's some newer professionals that are struggling with the concept of, hey, I need you to work Saturday and Sunday?
Absolutely. There's been opportunities presented to some of the newer licensed or newer hires, and maybe it's a builder opportunity to cover for an experienced loan officer. We need you to go out, four weekend days a month. So pick a Saturday or a Sunday. Every other weekend you still get a Saturday or a Sunday off. And it's, the response might be, oh, I can't, I've got I told Dustin before we came on, had someone say, oh, I can't work weekends. I've got 3 weddings coming up, So you have to prioritize, what is it that you really want? You know? I know I want to go to my friend's wedding, right? That'd be awesome to be able to do that. But do I want to build a career? Because it's not always going to be a 65 hours a week. When you build it up with a referral business and it becomes steady and you've got closed customers, it does become a lot more manageable. And then at that point, too, you've built up your business so you can scale a team. And I think that the point you make about, sometimes it's only just a text on the weekends and that's a cool text. I have no issue with that
Well,
text.
that's a text amongst friends, right?
Exactly.
I mean, you and I text,
Exactly.
hey, I'm going to be 5 minutes late. Hey, do you need me to bring anything?
Right.
Like,
Yeah.
we know each other. You're saying don't text me if I don't know you.
Exactly. Right.
And
to try to get my business.
Yeah, and only text me if it's only like maybe 15 to 25 characters.
Right.
Do not text me a freaking novel.
Right.
Call me if that's the case.
Exactly.
Yeah.
Exactly. So, you made a very good point, and for those that are thinking about getting into the industry or new to the industry. So the biggest difference between real estate and mortgage, in my view, is that mortgage is, although you work a lot of hours in both, mortgage is a lot more manageable in terms of controlling your own time. As a real estate agent, you have to get in the car and go show people houses. There's no getting around it. You have to take buyers out. You have to go out and see sellers if you want to list a property, right? So your time is controlled more so by your clients than it is in mortgage, because the beauty of mortgage is, I can say, hey, I'll make my Friday phone call, right? I'm working this weekend, give me a call. But I could be working from New Smyrna Beach, and I could run in and, go into the, condo or whatever and do a quick pre-call and come back out. And it took me 20 minutes, and I wasn't in the car with somebody showing them property for 4 hours. So there's a big difference there in terms of, even though you work the hours, you can manage the hours in a much different way than you can in real estate.
That leads me to my next question. Because you've been wildly successful in both real estate and in mortgage, what do you miss about the mortgage industry? And what do you love about the real estate industry?
What I miss about the mortgage industry is the interaction with people like Dustin. I miss all my peers.
Yeah.
I miss the challenge of a tough file when you can get somebody to the closing table. So those are things that I miss that a lot.
Anything you don't miss?
I miss compliance, TRID.
Regulation. Oh my God, TRID. You might not know this. You have to know this because you're teaching at FBC Mortgage. So the new Uniform Residential Loan Application, the new IRLA, I don't know if FBC has rolled it out yet. We rolled it out on Feb 1. Freaking nightmare.
It is.
It takes TRID and makes TRID look like it's kindergarten. And this is like college calculus in terms of the changes.
Yeah.
And there's nothing we can do about it. Like none of us that run mortgage companies raised our hand like, yeah, we can't wait to do this. No, it's bestowed upon us. So yes, you're not missing anything right now because you went from having branches full of subject matter experts. They knew their loan origination software. They knew how to structure a deal, run AUS. All of a sudden, that was just like ripped up, thrown up in the air.
Right.
And it's like, oh yeah, piece that back together. Good luck.
Right.
So yeah,
It is.
you're not missing the new IRLA.
Yeah.
I want to do a show on the new IRLA. I just haven't figured out how we could teach it.
Yeah, it would be difficult because it's very visual, and the differences between the 1003 and the new IRLA, the old and the new, are pretty
Yeah,
significant.
and those that are listening that are more seasoned, just know this, because a lot of my friends that work at the competitor, they're not rolling out the new IRLA until next week.
Yeah, I think March 1.
March 1?
I think maybe.
Okay. Well, nonetheless, it's not even so much having to learn it. Like I was talking to my friend Randy, Randy Gazinski at Radian. But I was talking to Randy the other day. She's like, oh, you should hop on one of our trainings. And I love my MI companies. MI companies give some of the best trainings. I tell anyone listening, reach out to your local MI rep. Typically the trainings are free, et cetera. But I'm like, Randy, I don't need someone to teach me what the form is and how to read the form. I need someone to talk to Ellie Mae, Encompass, DU, LP, Kroll Factual Data, because none of those folks and their computer systems are currently talking and get along. So I try to run something through AUS and it's a out of scope error. I'm like, what? Oh my, what?
And you can't
I don't
even
know
find your
what,
error.
I don't, yes. Back in the day, you work on a 1003 for decades. Well, oh, maybe if I just go clear out this one form, click this box again and rerun. Oh no. So a simple pre-approval that would have taken us 20 minutes is sometimes taking like 60 minutes just because we don't know what box to unclick.
Right.
We don't know why that information isn't flooding over properly. It's a nightmare. So I've actually gotten to a point to where I told my team, like, hey, once you guys get this like really figured out, I'm just going to take a course like I'm a rookie loan officer and let you reteach me how to take a loan application and run it through AUS. So compliance, you don't miss compliance. Sorry about that rabbit hole, guys.
Yeah.
So you don't miss compliance, which I totally understand.
Yeah.
What are you loving about real estate? Because you've been a full-time realtor for, has it been 5 years?
10 years.
10 years, wow.
10 years, 2010. Till now, 21, I guess. What I love about real estate, I love the flexibility of real estate. I love that this is the one thing I love about real estate where mortgage used to excite me is that I love the connection with the customer. And in mortgage, we don't get the connection with the customer like we used to because we actually used to meet people face to face and take their application face to face. And now everything's electronic. And so you could go through an entire transaction and never meet anyone face to face. Especially with COVID, because some title companies won't even let you attend the closings.
Right.
So I love that you develop a relationship with people. I mean, as a real estate agent, if I've worked with a buyer or a seller for a period of time, and think about though too, I mean, the sales cycle of a real estate agent versus a loan officer is 2 or 3 times longer, right? You have somebody in pipeline as a realtor for a lot longer
you're right. Yes.
than you do in mortgage. And
unless they're a listing in today's day and age. Then you might meet them once, put a sign in their yard, and 3 weeks later you're closing.
Maybe. Every once in a while there's an easy. But I miss that interaction because, like, to me, like, closing day is kind of like sometimes the sad day. I'm like, oh, man, I've gotten so used to seeing you and hanging out, and we'll go out and look at houses and that, and, like, you make friends and you sort of miss them.
Is it kind of like being back in school and it's summer break, and you're like, oh.
Yeah, it's kind of like that. Like, you know, I'm, like, happy for you guys, but sad for me because I don't get to see you much anymore.
Yeah.
You know, so that's what I really love about real estate too.
What do you look for in your loan officers? Like as a realtor, what impresses you? Like what differentiates a top loan originator, whether it's someone who's originating, who's representing the buyer and you have the listing, or whether it's your buyer and your buyer might have called your husband who's a licensed loan originator, or they might have come with their own lender. What is it that you look for in loan officers as a realtor?
Okay. As a realtor, I look for loan officers' communication. That's not just giving me an update on a loan. It's communication and making the process feel less cumbersome for them, for the buyer, than it is. You deal with people, and you know, even if, and I can attest to this too. Let's say you're living with somebody who has lived in their home for 10 years, 12 years, and now they want to purchase a new home, move up, maybe buy a second home, something of that nature. For all intents and purposes, that mortgage process is completely different than it was 12 years ago.
Yes.
It feels nothing the same. And it's very stressful. I mean, my husband and I bought a place at the beach. It's been a long time goal for us. We actually closed last January. And I was like, oh my gosh. I mean, I teach this stuff, and I forgot how stressful it is.
So full disclosure, when I onboard rookie loan officers, I always tell the story like, I just bought a house, and actually it was 9 years ago, but it feels like I just bought a house. I help run a mortgage company. I've been in this game for like, at the time, a decade, now going on 2 decades. And I make a joke out of it. I'm like, but I could have sworn my wife and I almost got divorced 3 times going through the home buying process, and I know what I'm doing. So, and I teach that because I want loan originators and realtors to keep that in mind, that we do this for a living, and it was stressful for you and Jeff, and it was stressful for me and Michelle. Imagine what our buyers and sellers and our borrowers are going through. We need to be able to carry that empathy with us when we consult with them.
Right. Be a proactive communicator, but also be a clear and concise communicator. Remember that they don't know all your mortgage jargon and acronyms and that type of thing. You know, try to make the process as seamless and easy as possible. Explain what the disclosure documents are. Don't say, oh, hey, you're going to get 65 pages of disclosures and you just sign them electronically and send it back. At least give somebody an overview of what they're looking at and what they're signing and why they're signing it and what the regulations are. And feel free to read through them, and you can download a copy also, right?
Thank you for saying that. Loan officers who are listening, I get it. You want to electronically disclose. I want to electronically disclose. It is way easier.
Way easier.
Period. End of story. Give your borrower the option. Ma'am or sir, would you like for me to schedule 20 minutes to hop on the call with you at a certain time, and I'll be on the phone when you go through your disclosures? Give them the option. You may hear no. Cool. You hear no, you move on. But at least give that person the option, and don't take my word for it. Take Cynde Velez's word for it.
Yeah. I mean, you'll probably You'll set a better foundation for the communication with the customer because you will have answered a lot of questions up front that are going to come up later in the process anyway. So why not spend that time up front, and then you don't have to get involved later or have an issue later,
Yeah.
right? So, and then, you're my trusted referral partner, the same as my home inspector is and everything else. Please don't freak my buyer out. Like, please don't. Right?
You don't want any 9 p.m. text messages from a freaked
please,
out.
Please don't text them and say, "Oh, I need this bank statement because the underwriter asked," and then they think their loan's not going to get approved or something. Please just communicate in a way that makes them feel comfortable, right? I don't want a home inspector that's going to tell somebody the house is falling down if it's not falling down. If it's falling down, then tell them that. But I don't want a loan officer who's going to freak out my buyer at every turn either.
Yeah. So, what I just heard you say is obviously know your stuff, right? You have to know your stuff. But communicate effectively with you, but more importantly, take care of your client. You need your client coming back to you, your buyer coming back to you as a raving fan, and you understand that the loan officer is a reflection of you. You need
1,000%.
You need your LO to have your back
1,000%.
As a team. Flip the script a little bit. So you're hanging out with your buddies over at FBC, and you guys are interviewing potential people to onboard to go through one of your Mortgage 101 courses so that they can launch their career in real estate. What are some key characteristics that you guys are looking for in who you will hire and why?
Well, looking for, again, and I don't want to sound redundant, but communication is always very key. I kind of laughed back when I was at Wells Fargo and interviewing a lot of loan officers in any given year because it was one of my main roles was to build an area and recruit. I always kind of had this sort of litmus test if I get down the road with somebody. Be the person that somebody would actually enjoy going to lunch with or having dinner with, right? If I don't want to have dinner with you, I might not want to work with you, right? And if I don't want to work with you, then maybe the real estate professionals and the builders don't want to work with you either. Be personable, be a good communicator, listen, right? God gave you 2 ears and 1 mouth because you're supposed to listen twice as much as you talk.
Oh,
right?
I like that one.
Yep. So be a good listener, be engaged in people and be truly interested. I think that's really important. The other piece for me that's extremely important is that somebody needs to be able to have demonstrated a history of being a hard worker. You got to grind it out. You got to have the engine. You got to want to do it. It's not going to be easy. And, when I see somebody, I'll give you a great example. A gal that I trained, and she was Rookie of the Year last year. She closed in her first year $38 million in business.
Holla. That's fantastic.
Brand new to the industry.
What market?
She's out in Colorado.
Okay.
So she has a little higher average loan amount. But it's still a lot of work and brand new to the industry.
Yeah.
Right. And she was in an environment where, believe it or not, her stepdad was actually in the mortgage business when she was graduating high school. And in 2008, everything kind of fell apart. And her parents told her, you can go to college, but you got to work your way through.
Yeah.
So she worked her way through by working retail to UCF, graduated in 4 years on time, and just determined that this is what she wanted to do. She wanted to help people, and she was going to make it. And she made it. That gal made it.
It's interesting. I had this epiphany the past 6 months, maybe 9 months ago, and I shared it with you off camera. But I even found, listening to you talk, I'm like, oh, I can put this into even better words. This profession, the mortgage industry, and I'm even going to say real estate industry, and probably most financial advisors and many life insurance salespeople, is a white-collar profession for the blue-collar worker.
Definitely.
It is, you got to be a grinder. You have to understand that there might not be something prestigious about what you do, but you are doing an extremely important role when you look at what mortgage and real estate do for our economy. When you're talking about this is that person's largest sale or purchase of their life, you can really impact someone's life in a very positive manner, and you can really screw something up. But so that's where I came up with it. So it's white collar, but you got to be a blue collar worker. You got to be willing to grind. It can't be about the title. It has to be about the people. If it's about the people and you're willing to grind, the money will come. And oh boy, when that money comes, we're talking heart surgeon money. We're talking real life-changing money. And if you are happen to be blue collar, imagine the impact you're going to have on your life, your children, your wife, but then your extended family's life. What can you do? And if you're people like Cynde, people like me, and the people you can bring along the way with you. You know, who from your neighborhood, who from your high school, who from your college can you then introduce, as long as they have that blue collar work ethic and they're willing to be able to do a white collar job well. No, that's fantastic. So really cool stories I want to share before we kind of wrap up. It's going to be a way for me to thank you, but also to teach a leadership lesson. So 2 awesome things Cynde did for me. She probably has no idea she did this. Did for me early on in my career. So I was a rookie loan officer. Then I had my breakout year. Then I went to work for Cynde and her husband, Jeff, and they gave me my first opportunity to manage. So fantastic. Timing, not so fantastic, but hey, we can't predict 2007, 2008. It just happened. We all dealt with it. But you were mentioning interviewing, like when you're at Wells Fargo, and later it was American Home Mortgage that we worked together. You had interviewed hundreds and hundreds, but I still remember, I wish I remember the lady's name, but it was my first interview. And I love how you told me I was going to interview someone. It was like this: hey, Dustin, so-and-so is coming in today. You're going to interview her. And that was it. That was it. You let me get in there, and I failed, and I flopped, and I floundered. And in hindsight, I look back, I'm like, oh, I know why Cynde did it. She knew this person wasn't fitting the criteria. So you gave me someone to interview. You still let them come in. You still let me interview just so I had the at-bats. So still today, I use that with our management team or even our younger loan originators, even loan partners. Let them get out there and fail on their own, because if you hired the right person, they're not going to accept that feeling that I had when that interview left. So I'm like, oh my God, was that a disaster? So I always appreciated that. The second thing is when the market was crashing, like, literally the sky is falling. We're being told this awesome company that Cynde just left a fantastic job with Wells Fargo for. I just left all of my people to take on this opportunity that I didn't feel like I was going to get if I stayed. And the sky's falling. But when it fell, it was a matter of like what we did. And you were inclusive. Like, I remember the day I was driving somewhere. I get a phone call, and it's you and it's Jeff, your husband, but he was also working in the branch. And you're like, hey, we're at Gators in Lake Mary. Why don't you come by? And I was like, all right, cool, I guess. Like, all right, it's like 7 p.m. I'm not used to this. And my big takeaway was the inclusiveness. Like, you included me, right? You and Jeff were trying to figure out, well, what's our next move? And instead of going out and making the move and just assuming your team was going to follow you, you're like, nah, we're going to reach out to our team. And maybe it was only certain key members of the team, but you included me. And that was the first time I felt included, and like my opinion mattered. So ever since then, I'm like, you know what? I like that. I want to make sure that I'm empowering, giving autonomy, and being inclusive in anything I do from a leadership standpoint. So for all the leaders out there, suggestion: if you're not including your key members in the decisions that you're making, please consider it and maybe stop what you're doing and start doing that. And also let your people fail. Let them get out there and just fall flat on their face. Make sure it's with something that's not going to impact your reputation. Make sure it's something that's, not going to be detrimental. So rookie loan officers, I love for them to start on refis and FSBOs.
Yes.
Like, if you're a rookie loan officer or you're training a rookie loan officer, why I like a FSBO or for sale by owner, it's I'm usually worried about the relationship. Don't screw up a relationship. Look, if you screw something up and we close a FSBO late by a week or two, I'm still going to feel bad, right? I'm still going to do what I can to make it right to the consumer, whether that's to give a lender credit, whether that's to pay for their hotel for a week, like paid their movers once before, but I don't have to worry about burning a relationship. And you taught me that, but you taught me that by doing it, not by ever using, your words. You used your actions. So thank you for that.
Wow, that's interesting. No, I didn't know either one of those particular events were as impactful as they were. And I apologize if I put you in a bad position with the interview, but I think that you have to fail forward.
Yes.
Right? And I think that people don't understand, especially, like even with our kids nowadays, we kind of put them in a rubber suit, and we don't want them to ever just, get a bruise. If they never know or learn at some point how to deal with failure, what is going to happen, right? How do they cope? So you have to learn how to cope, and those mechanisms somehow are really only taught when you experience it.
Yep.
And I see, and that's a parent advice too. You got to let your kids fail now and then.
Oh, you must.
It hurts your heart, but they have to learn.
Yeah,
So-
we had on this gentleman by the name of Brian Young, and Brian just launched, I'm hoping to be the next fintech startup, and they're mortgage focused, and young entrepreneur, but mad impressive. Like the awards he's won, I think this is his 5th company he's now started, just raised over $1 million in seed money for it. And he and I were chatting like you and I are doing right now, and we just came up with, it's a race to see who can fail the most, the quickest. If you can fail the most, the quickest, assuming you're learning from your mistakes, assuming
Correct.
you're not accepting failure and you're striving to get better, you will far outpace your peers tenfold because you're not afraid of the failure. And same thing goes parenting or even leading. When you're leading, you have to let your people get out there and fail. I just said it, but I'll repeat it. Like I tell them, if I can throw money at it and fix it, it's not a problem. Now, it'll become a problem if I have to keep throwing money at it because you're not learning. But if I can't throw money at it and to fix it, it's a big problem. Like basically, don't screw up a relationship. Don't say you're going to do something and then not do it. I can't fix that with money.
That's correct.
Right? But if you screw up a disclosure, I can throw a lender credit on it. Right? I mean, if you screw up calculating someone's DTI, I can probably get creative with the mortgage insurance in order to bring the payment down, to bring the DTI down. But you can't go screw, it's so I have to allow them to get out there and do it, get their hands dirty and make mistakes.
Right. So very true.
How about this? Theme of my show, of this show, it's not mine, it's our show. Me, JC, and everyone who tunes in and listens. So now you, because you've been a guest. One of the themes is everything you should have learned in high school but didn't because it wasn't taught. Looking back on your career and all of the crazy successes that you've had and all the great failures you've had the opportunity to experience, what are some things that you wish were taught to you so maybe you didn't have to experience them? What are some conversations you wish were being had in your household that if they were maybe had with you in your household, you would have had a quicker learning curve in the business world?
I think understanding the value of saving money pre-tax.
Okay.
Okay. So some people don't jump on that opportunity with their first job, and you need to do that because if you want to retire someday, that money is going to be there and grow, right? So saving, and my parents were always very good about that. I mean, growing up in the Midwest is pretty conservative in that respect. I think, like, what did I not learn in high school? That's kind of a tough question, really. I think that through the School of Hard Knocks, you just realize that you got to pick yourself up, dust yourself off, and go back out there again the next day.
Yeah, so maybe
That's
they
hard.
should teach that in college. Maybe University of Florida, Florida State, UCF, Colorado State, you name that state university, should teach a course called Hard Knocks 101.
Yeah. I can remember days in the business when I was newly originating and, I had this great pipeline. I was going to have a great closing month. And then next thing you know, somebody said, oh, I got a job transfer. And there goes one loan out of the, and then somebody else says, oh, we had a bad home inspection. And there goes another loan. And then before you know it, you don't have a great month anymore. And you're like, oh my gosh, what am I going to do? And instead of, don't wallow in your own self-pity, oh my God, what am I going to do? You go out and you get more business, right? So you just have to keep going.
Awesome. I'm going to leave it at that. Keep going. You have to keep going. Cynde, so grateful that you came in today. We tried to do this a couple months ago. I had a little Achilles heel accident. I'm glad that you're doing better. You're back on the tennis courts.
Yes.
If people are tuning in and you are in Central Florida and you are interested in finding out what your home is worth or you want to go buy a house, can they reach out to you?
Absolutely.
Can they pick your brain on how to get top value for selling their home or how best to buy a home in today's crazy market?
Would love the opportunity.
How would they get a hold of you?
Best reached, my cell phone number.
Yeah.
Yes, we'll share that. It's 407-619-5869.
407-619.
5869.
5869.
Just reach out and happy to help you. I've lived in Central Florida since '84, so I know the area. And Dustin, thank you, and JC. It's been a lot of fun. It's an honor to be on your show.
No, thank
Congrats
you.
on your success.
Shout out to Casey and Xinnix.
Yes.
Shout out to FBC Mortgage. Good luck with your teaching. I know you said you have like 22 people in your current class.
22 in the current.
So that's lots of future leaders in our industry. So, hey, thank you for helping shape the future of our industry. But she's Cynde Velez. I'm Dustin Owen, and you've tuned into the Loan Officer Podcast. We gots to go. Peace.